Hey, what's up, guys? It is Thursday, January 23rd. S&P made a new record high today. However, futures, S&P futures did not, but I anticipate that it will. The flows are still pretty strong. The corrective period is over. That was the period of the tax drains from mid-December and mid-January. We had a pullback in all three. S&P now at a new high. And we're going to come into a period of strong flows. First of the month payments are going to go out on January 31st because the 1st of February is a Saturday. So it'll come out on the Friday, next Friday. And then we're going to have a quarterly interest payment on February 15th. So we're going to get another spike in the flows. And then after that, probably stay strong till about the early March. And then we start to get into some interesting stuff. I mean, first of all, Congress has to raise the debt ceiling. If that doesn't happen, we'll get a significant hit to the flows. But let's assume that does happen. They usually do it, after taking it to the 11th hour. But then we get that April-May tax drain period, which is going to be unusually large this year. You got the normal April tax drain, and then you got that IRS extension that was granted to hurricane-affected areas, which I live in one of those, and that's May 1st. So you're going to have like a back-to-back double whammy on those tax drains, but that's still a way off. Today, Trump signed an executive order on creating a working group for crypto. I thought it was funny. I was watching it, and he said he had that guy, was it David Sachs, I think his name is, who Trump appointed as kind of like the crypto czar or something like that. And he said, when he was signing it, he said, this is to make the United States the world leader in crypto, and we're going to make a lot of money, and so is David Sachs. I mean, so he kind of gave away at least one motivation for doing it. It was like to reward his donors, who are heavily, most of them, into Bitcoin and crypto. But I thought it was interesting, and this is not the first time Trump has commented in that fashion that we're going to make a lot of money. I mean, he's a businessman, and he looks at the government like as a profit-seeking enterprise. And this is always the thing that I've said, where it's kind of bad in one sense to have a business person leading a government, because government and business, they're two separate things. I mean, government is not a profit-seeking enterprise. If it is, or if it was, it would end up owning all the means of production and all the wealth easily, because government creates the laws, it enforces the laws through justice system, law enforcement, everything. You're basically talking about communism or something to that effect, where if government wants to see, and government is the distributor of the accounting unit, the money, I mean, you can't look or expect government to be a profit-seeking enterprise, because then it leaves nothing for the non-government. Government controls everything through its power. So, as much as I like Trump, he's stuck on this idea that the government has to make money, when the government is the creator of money. I've always said this: the government is the maker of money and the taker of things, goods, services, labor. And the non-government is the maker of things and the provider of labor and the taker of money. Okay, that's the relationship. But when you start to get into this mentality that the government, and by the way, let's say that's his goal, does that get passed along to us, the citizenry? I mean, it should it should be that sequence, right? Like with the tariffs. If he's going to impose tariffs, which I'm not necessarily against, but if the tariffs are then used as revenue for the government, where they can now offset or reduce or eliminate taxes on individuals, then that's a good thing. But if the government is just taking in tariffs to reduce, the so-called debt, and there's no benefit to the non-government whatsoever. The other thing I thought that was interesting was somebody asked him a question. He was in kind of like a little press conference there in the Oval Office, and somebody asked him a question about interest rates, because actually Trump spoke at Davos at the World Economic Forum. He spoke virtually, and he said that interest rates, he's going to demand that interest rates come down, which I thought that was a very powerful statement that he made. And somebody at the press conference followed up with him. He had a little press conference in the Oval Office, and they said, well, what do you mean you're going to demand? Yeah, he said, I want interest rates to come down. Well, the reporter asked him, well, are you gonna talk to Powell? Are you gonna make that happen? And he didn't explicitly come out and say, I'm gonna make that happen, but he did say he was at some point gonna talk to Powell. The interesting thing was that when he said that, rates in the bond market, actually popped up a little bit. And to me, I kind of got a chuckle out of that, because that is typical of the bond market participant, monetarist mentality, central banking mentality, where they think they're independent and above control of any political influence, blah, blah, blah. Don't forget, the Fed was created as an act of Congress. And the Humphrey-Hawkins Act, when that was passed, I don't remember, I think it was 1978 or something like that, that instructs the Fed to follow or fulfill the president's economic goals. Okay, so it's this idea that the Fed, we're going to snub our nose. And actually, we kind of saw Powell do that several months ago when he was asked, if Trump asks you to resign, will you resign? And he just quickly said no. So there's some friction there. Trump, obviously, today, he was very adamant about wanting interest rates to come down. So we'll see how that plays out. The other thing that he said was, he said he wants OPEC to lower the oil price. Now, oil did react to that. It did come down about 1% or so. But the EIA petroleum report that came out today, I looked at the data. It's still very supportive. You got to be buying oil on the dips. It's not going anywhere, at least not now, based on that data. All right. So, we're getting a lot of action, a lot of activity from Trump and the executive orders. Much of that so far hasn't really been in the economic realm. It's been more on immigration and other things like DEI and things like that. But a little bit today, at least in his speech to Davos in the economic realm, and also with that cryptocurrency. And again, I just think that's, I look at that, I can't wrap my head around that. If he wants to do that, if he wants to make the United States the leader in cryptocurrency, I just keep asking myself, for what reason? There does not seem to be a logical or rational reason for that. You have the US dollar. It is the world's most utilized unit of account. And to jeopardize that by saying now, and like I said yesterday in the video, this has given impetus. It has been a catalyst now for many other countries to say, hey, we're going to follow the lead of the United States and embrace crypto, embrace Bitcoin. So that's just sowing the seeds for eventually a very negative impact to the US dollar. So, I mean, I have a small dollar short position against the yen. And I'm holding that, man. And I want to see how this plays out. And I said yesterday, there was still a long way from this ever becoming like a major factor. But I mean, we planted the seed. He's planted the seeds. And this is, you're not going to turn back the clock on this. This is happening. And if the United States gets seriously involved in crypto, I mean, another thing today is you had Larry Fink, who's the head of BlackRock. Sometimes I wonder about this guy because, yeah, he's built this behemoth of an asset management company. I mean, what do they manage? Like something like 11 trillion or 12 trillion now. He's done that through a series of acquisitions, you know, acquiring assets, managed assets from other firms. He's built up this behemoth of asset management, which shows he's a pretty adept, you know, pretty savvy business guy. But I mean, when he talks about economics, you know, he's talking about Bitcoin's going to go to $700,000. I don't know where he comes up with that number, like fucking out of thin air, 700,000. Like, I've seen numbers all over the map. I've been saying, like, if the U.S. seriously gets involved in Bitcoin, then, I mean, put a number on it. You can't really come up with a number. It could go, I mean, it could go into the millions. But he comes up with this number, 700,000, because he said if you're worried about debasement, you know, we hear this term thrown around a lot, and it makes me laugh because debasement of what? There's no base to the currency. It's not linked to anything. It's not backed. There's not a gold backing. There's not the backing of another currency. You can't debase something that doesn't have a base. And the other thing is that money creation, and I've been through this so many times, is driven by the demand for that unit because it's needed in economic activity. It's needed for people or institutions to net save. Okay, so the demand comes exogenously, like outside of you know, it comes from the outside. It's not like a bunch of people in a room saying, okay, let's put the money supply up to whatever, a gazillion, just because we feel like it. No, it's driven by the need to pay taxes, the need to transact and clear, the need to net save so you have something, financial assets when you get older and stuff like that. I mean, so this idea of debasement is silly. It's just ridiculous. You cannot debase something that does not have a base. Now, that used to happen under things like a gold standard or a silver standard. Like back in the old days, you know, when banks would issue specie or their own currency based on silver, let's say, back in the 1800s, and let's say you got, you know, a certain amount of their specie, a certain amount of their currency, their notes, whatever, for a certain amount of silver. And then, you know, they kept issuing that based on the silver. That was a debasement, okay? Because you would get less and less silver for that currency. There's no debasement in something where there is no base. And again, the money supply, if you want to use that term, grows as a consequence of the need for that money. For those three reasons I mentioned, you got to pay taxes in that money. You want to transact and clear in that money or that unit. Won't even call it money. Let's call it that unit. And you want to net save in that unit, because you're going to need it. So those are the driving factors, all right? It doesn't come from within. It comes from the outside. That's what creates it. So like, I listen to Larry Fink and I'm like, I don't know where this guy's coming from, man. He's a good businessman. He built this behemoth of an asset management company, but I have no freaking idea where this guy's coming from when he talks about economics. I really do not. And he's out there all the time. Like he's looked at as one of the major players on Wall Street because of BlackRock. They're into everything. They're into everything. So just wanted to point that out. Anyway, that's it for today. Please like and subscribe. Still trying to get to that 10,000 subscriber level. Still got a ways to go, but thank you to all of you who have subscribed. And don't forget to go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.